is, as you onboard more properties into the I-REIT, investors fear that you will increase the number of units issued as well, meaning that what we own could be diluted down the road. Is this a possibility, or is this an unfounded fear?
So the previous question, actually, I was answering to that.
Okay.
If the share trades at a discount, it's a disadvantage for existing people.
Yes.
If it trades at a premium, it's a disadvantage for the incoming people.
Yes.
But we trade at NAV.
Yes.
So even if we issue more units at NAV, nobody is either paying more or being diluted.
Yes.
So that's the reason why we hold it at NAV. And so that fear should not be there.
Okay.
We will definitely increase the number of units because we need...
That's definitely.
The bigger it becomes, the more properties, the more economies of scale you will get. And that's why you will see the yield most likely. It's not guaranteed. We always say, like with all investments, there is no guarantee.
Is guaranteed, yes.
But if you look at the macroeconomic dynamics, it's such that the rents will continue to grow because rents are a factor of supply and demand.
Yes.
As long as supply is constrained, you can expect. It's not a guarantee again, but you can expect the value to keep going up. And of course, as I said, if there is a strong underlying demand for the asset, then you can expect good, decent dividends.
Okay. Yeah. Next question. So the last time I had a conversation with your team from VUKA, you were still in the sandbox, but luckily on 23rd December, you got out of the sandbox, from the CMA sandbox. And that was a great milestone. Are there any other milestones you have achieved since then, or is there something we should look forward to as investors?
Okay, yeah, that's just 4 months ago, 5 months ago. So it's relatively recently.
Yes.
What we are doing right now is gearing up VUKA to roll out as per the CMA approval to a mass market, to more and more people. So you're going to see a lot more visibility on VUKA, a lot more market education, because I'm really strong on market education. It is very important we don't mis-sell VUKA by giving people the wrong information. So it's very important that we give them the correct information.
Yes.
So there'll be a lot more awareness drives like what I'm doing.
We are doing now.
Today is awareness.
Yes.
Yeah, we are just doing a market awareness.
Yes.
And that's critical. For me, I'm passionate about it because we have 15 million working Kenyans. But we have only 60,000 active participants in the capital markets.
60,000?
Of the 15, yes. It was in the CDSE issued a report last year. It was in the Business Daily.
That's very low.
It is extremely low.
Yes.
For a market of 15 million working Kenyans.
Yes.
And the place to invest, a lot of Kenyans, their money is held earning nothing in the banks, or they have plots, or they have cows, physical assets. We need to evolve.
Yes.
To financial assets. And the only way to do that is through market education. Educating people on what financial assets are, how do you get into them, what they will do for you. Don't bring them in. Like, for example, in around 10, 15 years ago when Safaricom was listed,
yes.
We had 2.5 million Kenyans join the open CDSE accounts to participate in that. But they were missold the share. People went to borrow from banks to buy shares.
Oh no!
Most people participating, and they burnt their fingers. And today, look at our the NSE. Their Kenyans are not participating.
That's true. We have more foreign participants than
yes. Even Acorn I-REIT did it. The largest investors are foreign. It's not Kenyan.
Really?
Yes. It is the development finance institutions, private equity. It's other people, not Kenyan money. It's pension funds from the US. It is a pity.
As the CEO, would you like that reversed?
Of course, we need to reverse this if we are going to.
It's our product.
Plus, also build wealth for Kenyans.
Yes.
Because how come those guys are savvy enough to see that these are good investments? Even the NSE, we need more Kenyans on the NSE. These 15 million, we need to have at least 20 to 30%, 2 to 3 million participating in the. It's the way to build wealth. It's the real way. The shares are only down right now because the foreign guys keep removing the money.
Yes.
But if Kenyans were participating,
yes, we would not have this kind of
capital.
Yeah.
So for me, just educating people, and there are good undervalued assets on the, you know, in the NSC.
Maybe this is a good opportunity
and people should be looking out for those opportunities.
Maybe this is a good opportunity to appreciate you for showing up, because we usually don't have a lot of CEOs of corporate companies showing up to do education, financial literacy. So thank you. Thank you for educating us.
I'm very happy to do that. The more we can educate our people,
Yeah.
because unfortunately financial literacy and investment literacy, it's not taught in schools. So you grow up, you know biology, you know chemistry, but you don't know about financial money, how
Yes.
to manage it. So even what you guys are doing is excellent.
Yes.
And you should keep it up. The more people know, the more they will put their investments in the right places where they will grow.
Yes.
Yeah.
Earlier on, you mentioned that in 2021, you had a return of 9.4%, and in 2022, a return of about 8.2%. And I know that you've already said that at least if you want to get to experience a good return in VUKA, you should put at least up to 50,000 per year. But either way, we have to address this. That is very clear, guys. Up to 50,000 per year. But still, people would like to know, how do you calculate these returns, just for them to have peace of mind and to understand why it's important to put the right amount of money?
Yeah. It's a bit sophisticated. I'll try to simplify it.
Yes, please.
So what happens is this: if you have a property that is worth 1 billion shillings and generates net operating income, net income of 50 million.
50 million.
That's 5%.
Yes.
So now that's 5%, correct? Now, if the value of that property goes higher than that 1 billion, the yield comes down. But the absolute amount is still the 50 million. Because now you divide 50 million by 1.2 billion, for example, you will find that now you're down to 4% or whatever.
Yeah.
So that yield, that's how it works. And it's based on the net income. So the students pay rent, that goes into a bank account, expenses are netted
Deducted, yes.
These properties operate roughly, on average, it's not an exact sense, around a margin of 70%. So 30% goes to run this thing. 70% is now kept there. Then every 6 months, you pay it out as the dividend.
Dividends, yes.
Which is calculated vis-a-vis the value. So sometimes the dividend can look low, but the absolute, what will have happened now is on the capital gain side, the gain will be higher. So,
Yes,
so
yes.
that's how it works. So your absolute, that's why we tend to look more at total return.
As opposed to
just one of this.
Yes.
Because the value of the property has shot up.
That's true.
The value, the capital gain is higher. So that's how generally you calculate the dividend yield and then the total return.
And what explains the reduction?
It can. Oh no, sorry, you go on.
Okay, so but is there something that explains the return, the difference in return between 2021 9.4% and
Yes.
2022 8.2%? And this question came from the fact that people read your report, your 2022 report, and you say, and even now you've quoted that you have an over 90% occupancy.
Yeah.
So to the average investor, they're like, how do you have 90%, 99% occupancy, yet your return went down? What happened?
Okay, the main thing is that we put some short-term debt onto the income REIT for when it was acquiring one of the properties from the development REIT.
Yes.
And the debt definitely costs more than the yield. That's what, but it's short-term, but because the benefit it had for the REIT is that we were able to increase the number of properties. Remember, I said over time, increasing the number of properties is what will drive the returns.
Yes,
yeah?
yes.
So
in the long term.
Yeah, so that was the main reason for that year's difference. And those things will, like, you will do them every now and again. There are decisions you will make that might mean that in the short term,
yes,
the return is slightly lower, but long term it will be beneficial to the REIT. And that's why you had me say from the beginning, please, if it's your 1 year money, please
if it's the emergency
put
fund
somewhere else.
Yes, if it's your emergency fund, yes.
This is for your long term.
Yes.
Where you're looking at, because that the more properties we put in the income REIT, the more we are going to grow the margin. So we took a decision to take that debt, which we will retire, in maybe another year or so.
Okay.
And then you'll see those yields. And so the people who came earlier, because also what happens is this: your yield grows as you stay longer
into the
investment. Then generally that's what tends to happen. Again, not guaranteed, but that's what generally you should see.
Okay.
Yeah.
That explains it. As an investor, I feel better after that response. Okay. So, but generally, investors, the key reason why we are having this conversation is because people want a sense of security, and the direct question is my money safe in VUKA, and what makes it safe?
Yeah. It is any asset-backed security. Is definitely better than a non-asset-backed informed security safety, because there is an asset. As I've said, even if tomorrow Acorn is not there, CMA will get another REIT manager to manage the assets on here.
So you can be fired.
You can go to zero.
And the information is out there.
It's there.
Yes.
Check. Is it regulated? Who's the regulator?
Who's the regulator? Yeah.
Make sure there is some regulator. That does not guarantee anything, but at least someone is oversighting and providing.
Yeah.
Then secondly, it has the asset behind there. You can go and see this quote. You can actually go confirm they exist.
Yes.
So in a way, you're becoming a landlord without actually all the hassles of being a landlord. All these VUKA investors are landlords today, but not. They don't get calls at 2 a.m.
At 2 a.m.
The tap is leaking.
Yes, that's true.
They don't collect rent at the end of the month and dodge tenants who are dodging. That is all done for them. Yeah. They get a return.
I like that you've mentioned that perspective of getting a call at 2 a.m. because a lot of investors in Kenya have this perception that owning rentals is passive income. Yes, when you talk about owning passive income to earn money while you sleep, people think that owning rentals is passive income.
It is
Please
not
demystify that.
Operating rental property is one of the most hustle business I can tell you there is in the world. It is not passive in any way, shape, or form.
Yes.
Yeah, there are many. The only thing is that even if you came to our properties, it would not be visible to your naked eye how complex that operation is. So even the guy who owns 1 or 2 units, if you sat down and they told you the things they go through, it's nowhere quality. Owning rental property and owning a car shop in the neighborhood, it's the same complexity.
Yes.
It's the same, it's not passive.
Yes.
Yeah.
So at least now we know the difference, and that is what makes VUKA a good investment, because it's passive. You give them your money, it's managed, it's regulated, and at the end of the day you get both your capital appreciation and your dividends.
Exactly.
That is what passive income means. Earning money literally while you sleep.
You can go home. You can even go to vacation.
Yes.
That is what passive income is.
Yes.
Anything else is this hustler thing. Yes. That's not passive income.
Yes.
You hustle, you earn it, which is okay. But don't mix it with passive income.
Are these assets, the Kwetu, the Kejani, are they insured?
100%. They're insured against fire, earthquakes, civil unrest. They have to be insured. They're all fully insured. Okay. And that's the other thing that you're buying. It's fully insured. It's even we insure against loss of rent. We take a very comprehensive in terms of, say, the building. You can't. A fire goes on one floor, and now that floor is not usable. So you lose rent for that floor. So you can take insurance for that.
Yes.
Yeah. It's not about insuring against if there are no students. It's insuring against being unable to let the building or the floor, whatever, because of something like a fire, a flood, even flooding, all of that. It's all insured.
Okay.
Yeah.
So let's talk about the 3% charged on buy and sell orders. Even if, again, we go back to, you said that if you're putting your 2,000 and 5,000 and 10,000 and leaving it at that, of course, it will not make, the math will not math, like Gen Zs like to say. But either way, because it was a question that was submitted, if people feel that it's too high.
Actually, that is, again, perception.
Yes.
So before we launched, and part of the sandbox was to make sure that the pricing is not exorbitant.
Okay.
Now, if you buy a unit trust, you pay a management fee. There's a fund management cost to that.
Yes, that's true.
That it has to be deducted before you get your return. If you invest for 1 year, for sure VUKA is more expensive, because if that fund money unit trust charging you 0.5% and you paid 3%, yes, you're more expensive. But again, that's why VUKA is long term. Because if you put that same money, but now 6 years and you've paid that 0.5, you have paid that cost.
Yes.
So if you put for 10 years, the guy in the unit trust will have paid how much? 0.5 times 10 is how much? 5%.
Yes.
In VUKA is the 3%.
Yes.
It's only that you pay it at the beginning.
Yes.
And it's because it's only when you transact.
It's only when you transact.
It is only when you transact.
Yes.
And that's why we are not encouraging people to, like now, buying and selling, it's wealth destructive.
Yes. Very
because
counterproductive.
If you buy, you pay 3%, you sell 3%. That's why I'm saying don't bring your emergency money, another 6%.
Yes.
Entire dividend share transaction cost.
Yeah.
Then you've paid the joining.
Yes.
But when you are 25, 30 or 35, and you're looking at your next 5, 10, 15, 20 years, and how you can reliably save in something that is asset-backed, regular, then now VUKA starts to make sense for you. And that's why I said at the beginning, I am very keen that we don't missell things.
Missell this product, yes.
All these financial assets, I call them, need to be sold properly to the right people.
To the right
people. So that we stop disappointing Kenyans. Yes. I've told you the story of shares, why Kenyans took off. They lost money. Yes. In the Safaricom IPO. There were so many IPOs, but eventually the ordinary guys lost money because it was missold to them. Oh, buy the share, it will go up by, I don't know, it will double. The loan you took of 5, you cannot buy shares with a loan from a bank.
Yes.
It is the worst possible thing you can advise someone to do.
Yes.
But that's what people did.
That's what people did. And still do.
It was oversubscribed, but soon people burnt their fingers. Yes. Look now what we did to our market.
Yes.
So the same thing, I'm keen to make sure that if we get, of these 15 million, if we get 100,000 in VUKA, we want the right 100,000 who are saving for the right reason and who understand what the product is doing. That's why I'm delighted to come to shows like yours and talk, because unfortunately there is just too much mis-selling. Or misunderstanding.
Yes.
Maybe sometimes I didn't missell, but you misunderstood.
Misunderstood, yes.
Which is also possible. Yes. But again, as we educate the market, hopefully there'll be less mis-selling and less misunderstanding. Yes. Then we can get it into proper conversations on financial assets.
I like this conversation also because it reminds me that even Warren Buffett himself says, don't interrupt your compounding unnecessarily. Because this what people are doing with VUKA is exactly that, in that you put your money in it, you pay that 3%, 3 months later you remove your money.
It is value destructive.
Yes.
Don't do
it's a lose-lose.
If you need that money,
yes,
or you might need it,
yes,
go and get the unit trust.
Yeah.
And keep your money there. Then but if it's the money you want, and that's why I said, if you have, say, 5,000 shillings to invest every month, you put a little somewhere for different purposes.
For different purposes, yes.
For emergency, you can put it in another. For long term, you can put in VUKA. For medium to short term, you can put in unit trust.
Yes.
You just make sure, because you need that diversification to reduce your concentration risk. Because so and people think that, especially like bonds or equities, that they'll just keep going up. No, they go up, then they come down. And if you're so concentrated there, you can lose out badly.
Yes.
Yeah.
I understand. You earlier on you talked about how much it costs these students or these parents to rent to stay at Kwetu at Kejani. Somebody wanted to know what informs the pricing of this product.
So that what mostly informs it is the cost of building the asset and the cost of providing the services that we provide.
Yes.
Because we provide an asset and a service.
Yes.
The cost of that, then a margin for the people who took the risk to invest in the D-REIT. They have to make their return. Then we know the price.
Yes.
But in addition to that, what most people don't see or know is that we do a lot of market surveys and research. So we work with market research companies.
Yes.
We hold focus group interactions with the student. We say now, how much? We ask them many questions. Where you stay today, what are you paying? What does that include? What does, what is not included? Would you pay, if we give you this and this and this, would you pay for it? How much would you pay for it? And that side also informs how we price.
It's not guesswork.
No, it's not guesswork. There's a science to it.
There's a science to it.
Yes.
That's very important. You are dealing with professionals, basically what you're saying. All right. So another question that was admitted is about the occupancy and performance levels. You've indicated in your annual report that you provide over 3,000 beds against a demand of up to 110,000 beds. You'll correct me if that's wrong. Why are you not moving with speed to grasp this market before someone else does? What if another company comes and takes over? Why are you moving
first
faster?
and foremost, even if 10 people come, we won't satisfy this market even for 20 years.
Oh man.
Secondly, the resources required are very huge. And that's why I don't lose sleep about competitor, because the barriers to entry are very, very high. It's like telling Safaricom CEO whether he's losing sleep over a competitor coming. He knows it's just Airtel, maybe a bit of Telcom, but there's no new entrants. The barriers are too high to entry. So, and that one of those barriers is the resources we need to mobilize. We estimate, we plan and hope that in 10 years' time, we will have 60 to 70,000 beds.
Okay.
That
10 years.
is a $1 billion plus investment. So it's a lot of capital. So that's why you can't just go and just build them, like biscuits and just roll them out like that. It takes, and the planning that every new building we do takes 3.5 years from the day we buy the land to the day it's actually sold to the income REIT. It takes 3.5 to 4 years.
3.5 to 4 years.
Yeah, it's a long duration. So we have got about 17,000 beds under development right now at different stages. We've just opened, as I mentioned earlier, in Karen, we've opened 1,350 beds.
Yes.
So we are constantly adding them, but we can't add them fast enough, and we never will, because it's you have resource constraints.
Yes, that makes sense. And then another question is about the funding matrix. You mentioned in your 2022 annual report that the key risk you face as a REIT is the ability to scale up through the acquisition of new properties. You cited funding as an existential challenge. You also spoke of a pipeline of investors that you've developed. Is it possible to take us through your financing plan for the acquisition of new units, whether it's debt, equity, or both, and where you're placing unit holders in all this? What's your funding matrix? Okay,
let's focus on the income REIT.
Yes.
Because the development REIT is slightly different.
Yes.
In the income REIT, we primarily want to fund the acquisitions with equity, no debt.
No debt.
I told you we did short-term debt when I was explaining that return. Different, but generally we don't want to use debt unless we can get debt that is priced lower than the yield.
Yes.
So if I'm giving a yield of 6%, if I can get debt at 6%, I will put debt.
You'll put, yes.
And as we speak, there is some debt funding we are sourcing externally that may allow us to do that. It's significant amount of capital. And that's part when you're asking what's the plan for funding.
Yes.
That's one of the funding sources.
Yes.
It's a very significant. We may announce it in the next 6 to 12 months, hopefully.
Yes.
We also raise a lot of equity from pension schemes investing. Kenyans have invested. We now have, as I told you, almost 30 pension schemes representing more than 2.7 million pensioners or people pension plans. We also we are also working to bring in FDI global capital into the equity side. So those are some of the primary, and of course VUKA is also equity investors who are joining.
That's true.
These institutional investors on this long-term journey. So, and we think that there are very many Kenyans, once they understand VUKA, there are very, very many Kenyans who will want to invest once they understand they do it the right way.
Yes.
We will get a lot of Kenyans investing in VUKA, we believe.
Okay.
And so all these the sources of equity that come in, and it's good because it gives you a diversified source. We are not dependent on any one source. Okay. And every year we are increasing the sources. From development finance institutions, I mentioned, from global investors, from local pension funds. We think this year we might get to 40 schemes. So every month we onboard a new pension fund that invests, and we are seeing they are getting more and more interested as they see what the returns they're able to achieve. Yeah.
Talking of VUKA, somebody submitted a question that while I can purchase units on the VUKA web application, investors would feel more considered if there's a mobile app for the same. Are you going to launch that soon?
I believe we will. Timing, we went for a web app because when you're starting, when it's an early app, fintech, you generally start, otherwise you have to keep updating it too often. That's the reason we haven't gone yet the mobile app, but I'm sure we will soon.
Okay. And to build up on that, also the fact that someone has to wait till end month to purchase units or have units allocated to them seems like an inefficient way to deploy capital. Any plans to change that?
Again, misunderstanding. If you're investing for 5 years, what is 30 days? But if you're investing for 1 year, then 30 days is a big deal. It's operationally more efficient that way. Will we change it over time? I think we'll make it more frequent over time. But again, if you sell it to the right person, it's not a problem because we give you a window to load because people get paid at different times. Some people are even doing informal jobs. If you work in a salon, it's probably your tips that you put there. So we give you a month to aggregate enough money, then we do the trade. But when you're investing, say, in a fixed deposit account, even a day is too much. But when you're investing
for the long term,
that thing is very crucial. Kenyans need to understand that these are different pots. None is better or worse. They're different.
It's not a comparison game. It's like what role does each of these investments play in your portfolio? Period.
And then you leave it like that. And it's even SACCOs, a financial SACCO, you decide I'm putting so much a month. Some people they never borrow. They just use it as a way to save. So everybody, and it's good to have. I tell people, we have a SACCO for our stuff. It's growing. So what my point is, you know, all of these have a role. None is better, worse. That's not the comparison. No.
That's not the conversation here. That's not the bottom line. So another question is, while addressing the note on credit risk on, this person was very specific, page 34 of your annual report, you mentioned commercial tenant leases. Could you expound on how commercial tenants come into play in the Kwetu and Kejani brand.
Yeah, happy to. So in all our student properties, we provide certain services.
Okay.
Some of this is there'll be a small convenience shop or tuck shop.
Oh, yeah, I've seen them.
There will be a cafeteria.
Laundry.
We are not running those things. The laundry,
Yeah.
they're services to the students.
Oh,
those
okay.
are commercial tenants.
Yes.
And because we don't want a young girl who's 19 and needs sanitary pads or something in the middle of the night, starting to go around looking for little convenience.
Little convenience goods.
Or in Kwetu, people cook for themselves. You get bread down there. They're just little convenience shops. So they vary in size depending on the location. Some are much bigger. So that's the commercial rent. But it's for most of our properties, the commercial rent is less than 2-3% of the total revenue. Okay. Some even it's 0.5. Okay,
that clarifies it. Now, maybe I could ask a question about Acorn Holdings Limited versus the Trustees. What is the interface between the two? For instance, we as unit holders know that the I-REIT properties, and you mentioned it earlier, we know that the I-REIT properties are owned on our behalf by the trustee, who is the cooperative bank. To what extent is Acorn Holdings Limited part of the ownership? What is the relationship between Acorn Holdings Limited and the trustees?
Okay. So I'll explain 3 entities.
Yes.
Acorn Holdings, Acorn Investment Management Limited, and the trustees.
Yes.
Acorn Holdings owns Acorn Investment Management Limited, the REIT manager, 100%.
Okay.
It's the wholly owned subsidiary of Acorn, and then Acorn Investment Management Limited is regulated by the Capital Markets Authority. Okay.
Yeah.
Acorn Holdings on its own right, because before we created the REITs, we were the ones investing in these properties, our capital.
Yes.
So we are also significant shareholders in the REITs through Acorn Holdings, the parent company. So that's the role Acorn Holdings plays. It's a shareholder like you, Agatha, if you're a shareholder, or like the other guy, your shareholding may be through VUKA. Acorn Holdings, because its stake is fairly significant, holds it in its own name, and that's the relationship. The trustee holds all the assets. If you go and read the owner of our Hurlingham or Strathmore, whichever, the name on that is Cooperative Bank of Kenya, owner.
Yes.
Because they hold on behalf and in trust for the investors. Acorn is one of the investors, and therefore the trustee is also holding. We are just like they're holding in trust for you, they're holding in trust for us. Yeah, we together.
Yes.
The role of the trustee is to just hold the assets on behalf of the investors and act in their best interest.
I think this question, that clarifies it, but from what I'm reading, this person is asking, is it possible for Acorn Holdings Limited to pay themselves more or to pay the manager more just because the two companies are interconnected?
It's not possible. That's why it's regulated. We have even to declare what is it paying, how much did it pay. It's contractual. There's an agreement. You can't. It's audited by the auditors who have to confirm. That's why I keep telling Kenyans, please go into regulated products because they have some basic governance in place. People can't do shenanigans, and if you do, it's very costly because you'll be censured by the regulator.
Yes.
So no one wants to get into the regulators' crosshair.
Okay.
So and we have to file reports, annual reports, semi-annual reports with the regulators. We have independent verification by the Deloitte have to come and audit and confirm independently. So there is no room for the manager
for scams
to play those games.
Okay.
Or if he did, they'll be caught very quickly.
Very quickly.
Yeah, which is what happens in the unregulated space.
Yes, that's true.
And Kenyans love it because they are being told 15%.
15%, yeah.
I mean, 15%, it would not be possible.
The higher the return, the higher the risk you're taking.
Our D-REIT gives returns in excess of that 15%. But the risks are high, and it's only for sophisticated investors who can lose everything.
Yes.
So they understand it.
They understand the risk,
But it's the risk-return profile is there. But for the average guy who just wants to put their money, go back to their daily job and know that they are safe and secure, these are the right investment products.
Okay, we are almost coming to an end. Somebody is asking a question in relation to the green bond. Why did you have to repay the 800.2 million worth of the green bond early? And in hindsight, which with the interest rates rising now, don't you feel it's going to be increasingly expensive to finance new projects? Maybe you can even start with explaining to somebody who's never heard of this concept of the green bond what it is, and then say why you paid it early.
Right. So, first, let me be clear. The green bond has nothing to do with the income rate, only the development rate. Okay. So let's start there.
Yes.
It has no role in the income rate.
Yes.
We did a green bond is a bond like any other bond.
Like any other bond, yes.
But this one had a green rating on it, certified by an international rating agency based in London called Climate Bonds Initiative. They rate bonds. So once you get the rating, you can issue it as a green bond. Okay, and there are a number of rating agencies for green to make sure that you're not just putting a label.
Okay.
So you have to do certain things that demonstrate, mostly to do with climate mitigation. So, for example, your use of energy, your use of water, your use of materials. And they go through a rigorous independent auditor who makes sure that you're complying and you've met the criteria to get the certificate. So that then becomes a green. But what is the advantage of it? There is more capital today going into green investments than non-green investments.
Yes.
Because the world is getting so conscious about
the
challenges we face. Yes. So there is more capital in that space. And it gave us a lot more positive outcomes, including positive coverage, than if it was not a green bond. So that bond comes in, because a bond, it comes in as debt to fund the projects we build. So our property next to Strathmore was the first one to enjoy the money from the green bond. Drew the money, paid, because in the D-REIT we fund 35% equity, 65% debt. That's how we fund the project. So if the project is $1 billion, 350 million is equity, 650 million is the debt. Then when the property is sold to the I-REIT, we pay back this bond, the portion that funded.
You have to pay back.
You pay it back, that's the way the bond was structured.
So it wasn't paid early.
It wasn't. It was fast. It wasn't. It was always the intention to pay once it's sold here.
Yeah, yes.
And we are continuing to pay down. We've paid another again, and this year we'll pay again. And by next year, end of next year, we'll have retired the bond, and we'll have another source of debt capital. So that's something that we keep doing. It was always the intention. It's only that we have up to 5 years to pay it, but that means we have to wait until year 5. Okay. Since it had been repaid, once the asset was sold to the I-REIT, we just needed to repay the bond.
Okay. A few more questions before we finish. What is the relationship between Sion and Akon? And this, Triba says that this is in connection to Superior Homes, where one of your Akon directors is a shareholder together with Sion.
So there is no relationship between us. There is no relationship of either shared directors, common shareholding. We don't have a relationship with them.
Okay. Yeah. All right. What does it mean that VUKA is regulated as an ISP, and what's the difference between that and collective investment schemes? And to build onto that, how does this structure safeguard investor interests?
First, we are not regulated as an ISP. I don't know where you picked that. We are regulated under what is called a no objection mechanism. Because the regulations for products like VUKA have never been enacted.
Yes.
But there is already those regulations, the draft regulations, when they will, for ISPs, what you've now referred to, it's not currently in place. When those regulations are enacted by Parliament, we will then go and fall under the ISP regulations. So we don't, currently, those are still in draft form. So VUKA, under that no objection mechanism, the CMA still has to, we still have to report and comply. If you saw the notice that they gave, they'll give us various conditions for operations, and we have to comply with those conditions.
Okay.
Yeah.
Okay. Because
to continue enjoying the no objection status.
Okay.
Yes.
Because I was about to have a follow-up question. That
and that's what they do
yes.
with products from the sandbox, because they are innovative.
Yes.
They didn't exist. That means the regulations haven't yet been in place, and they use that to then know how even to how to structure the regulations. And they're definitely using VUKA to see how to address some of the issues for the new regulations for ISPs.
So it's a learning curve.
Yes.
Okay.
Yes.
So 2 more questions. Somebody submitted a question to do with special purpose vehicles. They say that I realize that every property is owned by a limited liability partnership styled SPV. Why do you prefer this ownership architecture as opposed to one company owning multiple properties? And this person went ahead to say that Edenville Development LLP owns Kwetu Jogoo Road, Spring Green Properties LLP owns Kwetu Ruaraka. I don't have to read the whole list, but why this style? Why not one company owning all of them?
Yeah, so it's primarily because of how they are funded, and also because of flexibility if you want to buy and sell them.
Okay.
So the way we fund these projects, especially the debt component,
yes,
you need to, in project finance, there is a concept called ring fencing. So you need to ring fence the asset, and you do that through a legal entity.
Okay.
That's the only way to do it.
Yes.
And that's the reason we create these entities. The limited liability partnership is a better way of ownership than limited liability company, because the partnership has certain benefits, like when you're even dissolving it and etc. It's not as complicated as a company. And so when Kenya passed the Limited Liability Partnership Act, sometime I think a couple of years back, you will find a lot of property or infrastructure energy SPVs, they operate under LLPs. So that's the reason we do it.
Okay, that's very clear. When you say, this is a question about 100% acquisition of properties, when you say that the REIT acquired 100% shareholding in Kipkabus Development LLP and Rowan Properties LLP in 2002, what does this mean, and of what special benefit? In 2022, yes. What does that mean, and of what special benefit is it to us as unit holders, and who are the other partners?
So, well, those are 3 questions.
Yes, okay.
So the property was previously owned by Acorn, just like all the others. So if we, in that particular property, when we were developing it, we had a landowner partner, a family, an individual family. So when you sell an asset into the REIT, by the regulations, it has to be wholly owned by the trustee. You can't have other people there. So we bought out our partner, and then transferred it to the REIT,
yes,
so that the REIT trustee again can hold the 100% beneficial ownership. The third question was about whether there is a special benefit. There's no special benefit. It is the regulations that the REIT trustee has to be in full control of the asset. It can't be 50%, 90%. Has to be 100% beneficial.
Yes.
Yeah, so that they have control of, because they are then representing the investors.
Okay,
yeah.
That's very clear. And now, as investors, what should we look out for in future? With
VUKA and the I-REIT?
VUKA or the I-REIT, anything?
Yeah, so I think the key thing is more properties and more beds, and of course the I-REIT growing bigger and bigger. And hopefully, as I said, as it grows in size, it will be able to pass the benefits of scale to investors.
Yes.
And I think that's the biggest thing to look out for. Of course, look out for your dividends, but now be realistic about what your expectations are.
Yes.
Be look out for your capital appreciation. That, I think that's a very big part of the return. Don't just look at VUKA on dividend only. Look at the total return.
Yes.
I told you the example that if you save 1 million shillings for 100 years at 10%, it is 13 billion. It's the power of compounding.
Yes.
VUKA is a compounding
vehicle. Yes.
That's where its real lies. And so that's, I guess,
that's
what you
the
should
magic lies,
look out for.
Yeah.
Of course, as demand continues to be resilient, then we can expect that rents will continue to grow. And if rents grow, your unit price also came in on day one, came in at 20 shillings. VUKA came in, I think, I can't remember exactly, I think it came the second half of the year, so it may have come in at slightly higher than 20. But today, the unit price keeps going up, and that's what keeps increasing your value. It's a store of value.
Yes.
Think of it as a store of value. A better store of value than idle land, or those rental units we talked about.
Yes.
It's whilst it's indirect, that indirect is what makes it a passive
income
investment.
Okay.
Yes,
Any parting shot before we close?
No, well, the only parting shot is to say I'm most happy to come back and answer any more questions that your tribe, keep growing the tribe.
Yes.
I think this Kenya needs so much, both the learning knowledge about how to invest and also doing the actual investing. And, if I were to say one thing to any young Kenyan today, under 35, start early, even start small, but start early. The earlier you start with your investment journey, the better.
Yes.
Yeah.
Start early and start small.
Yeah.
Thank you.
You're most welcome.
Thank you so much for joining us.
Yes,
as I said, it's not common for a CEO, a whole CEO, guys, joined us on the tribe. And he also said that he's going to join us to answer more questions. Therefore, if you have any extra question, if something was not clear, if you need more information, leave all your questions in the comment section, and I will invite him again a few months from now to answer all your questions. When it comes to VUKA as a product or Acorn I-REIT as a product, I always do the digging, I always ask the questions, I always bring a panel. So ask, and see you next time. As always, click the like button, share this video to as many potential investors, friends, and family, and as always, subscribe to the channel. Thank you, and see you again next time.